Welcome back to Trades by Mo, and in this video I'm going to show you a powerful moving average strategy. I'm going to show you exactly how to use them and when to take entries and what settings you're going to need. So make sure that you don't skip a single second of this video and watch it right till the end so you get everything. Thank you for clicking on this video, and I don't want to waste any more of your time, so let's jump straight into the strategy. Moving averages are a great way to show price data. Candles can be quite confusing sometimes and look very muddly, but moving averages are a great way to show the long-term trend and also the short-term trend. But before I show you this excellent trading strategy, I just want to quickly tell you about the backtester that I use. I'd like to quickly tell you about TraderEdge. TraderEdge is a website that allows you to track your trades, backtest strategies, calculate position sizes, and so much more. Thousands of traders are using TraderEdge to get an edge on the competition. The backtester section allows you to easily track backtesting progress, and it provides a ton of important data. I've used this to backtest all of my strategies shared on the channel. TraderEdge also provides indicators and strategies that you can start using today to become a profitable trader. On top of all of this, TraderEdge is also giving you a step-by-step guide on backtesting worth $100. You'll also receive a full course on how to build a profitable mechanical trading strategy, which has a value of $240. If you sign up right now, they'll even throw in 4 pre-made high-quality strategies that are worth $100 alone. That's $470 worth of bonuses absolutely free. And they offer a 7-day free trial so you can try it out today completely risk-free. Make sure you click the link in the description to claim your bonuses now. And back to the video. Okay, so let's jump straight into this. So we're on tradingview.com. I'm going to head up to indicators up here, and we're going to get our 2 moving averages. I'm going to type in EMA for exponential moving average, and it's this moving average exponential here. We're going to click this twice, and you can see by default that it's set to the length of 9 for the EMAs, and we're going to change this. So for the first EMA, go to the settings. I'm going to change the input length to 50, and I've set the style to yellow, thickness 3, so it's nice and clear so we can see it. And the second EMA, we're going to go up to settings up here again, set the length to 200, and for style I've changed it to white, thickness 3 again. I'm now going to quickly explain the strategy, and then I'm going to tell you exactly how to take entries. So the moving averages are a great way to determine trend. Usually when price is above the 200 EMA, people are only looking for buys, and vice versa below for sells. I'm going to show you an amazing moving average hack that will allow you to avoid these big stop losses. So step 1 for this, we want to wait for the 50 and the 200 EMA to cross, but we don't enter, we don't do anything, we wait. The next thing we want to do is we want to wait for a pullback to either the 50 EMA or the 200 EMA. The third thing is we want to see clear rejection, and then I'm going to show you how to set your stop loss and your take profit. So we can see here 50 EMA was above the 200, it crossed below and locked in with the candle close, so price came down, price then pulled back up to this 200 moving average here. Now we then had a clear rejection right here. We can see by this green candle touching the 200 EMA and then the following candle pulling directly back. There was also a huge wick here, so price did really try to test it. But this candle pattern is known as a railroad tracks. There are different names for it out there, but this is what I go by. So ignore the horrible drawings, but this is what a railroad tracks looks like. Imagine just 2 normal candles, both parallel with each other, but this is a clear indicator that price is rejecting off this level and it doesn't want to enter. So we'd enter, we'd wait for this second candle to close that locks in the railroad tracks, and then we'd enter on this third open candle. Put our stop loss at the recent swing high, which would be the top of this wick, and we target 1.5 times the risk. Now you can see again, price moved away and pulled back again to this 200 EMA, and yet again it made a railroad track rejection right here. You can see with this candle coming up and the following coming down, but we wouldn't have entered on the close of this second candle as price is above the 200 EMA. We want to make sure it's closed below this EMA before entering the trade. So at the start of this candle we'd have entered, stop loss at the recent swing high, target 1.5 times the risk again. And finally here we can see we had a rejection here. This isn't a railroad track here, but this is actually known as a star formation where price comes up, and then the following candle doesn't really move and stays in the same position and then comes back down. You can also get this in reverse where the middle candle is at the bottom. But this is a great indicator that price is rejecting off of this level, and as it is off the 200 EMA, we'd be able to enter our sell trade on the close of this candle, so the open of this one, stop loss at the recent swing high, and target 1.5 times the risk. Just remember, we wait for the cross, and then we wait for a pullback, and then we wait for price to reject off of the EMAs. But thank you very much for watching, and thank you for TraderEdge for sponsoring this video. Please go check them out, and definitely go and check this video out because this is one of my favourite on the channel. Thanks for watching.